All right, guys, welcome back for another Bitcoin macro analysis video. I just want to give an update to a monthly trade I was taking and uploaded a video on previously. I know I've been talking about it a lot, but it is a monthly chart. It does take a long time to play out. And I was looking at this area here as a higher low in the monthly, right? Price comes down, sets in a higher low relative to this low, comes up, starts taking out the highs, comes down, rallies off, defends these lows briefly, rallies off it, but now it's in, coming down below these lows and validating it. Now, I don't have closure on the monthly, but I don't have the luxury of waiting for closure because it's early in the month. There's 25 days left in the month, so you can kind of see the level a little bit better on the daily chart, or the invalidation level, that is. So right now, the macro setup from a monthly perspective that did exist in the chart is being violated, and I want to touch on some of the fundamental aspects of what's going on in the Bitcoin market that were previously confluent with what the price setup I was seeing in the market until today's price action. So right now, this is the Bitcoin illiquid supply. You can see it's in a steady uptrend. What the Bitcoin illiquid supply represents is the number of Bitcoin addresses held by wallets that have no history of selling or really moving in the last, I think, 6 to 12 months, I believe. And it's hitting all-time high, essentially. So not only is it at historic highs, but it's actually at the highest recorded level ever. And I believe that's 65%. So 65% of the wallets are being held by these long-term, you know, holders who are keeping it in cold storage and holding it for long periods of time. Now, that kind of lines up with what we're seeing on the Bitcoin exchange balance, right? This is the Glassnode chart showing Bitcoin balances on exchanges, BTC exchanges. And you can see since March 2020, it's been in a pretty defined, clearly defined downtrend with a few bounces along the way. But you can see here that it's very obviously has an inverse relationship with price action, right? So very clear inverse correlation there. Now, that basically lines up with what we're seeing on the liquid supply, right? So as the liquid supply goes up, the Bitcoin is being taken off exchanges and sent to cold storage wallets. So as we can see this increase in the illiquid supply, that's represented in the Bitcoin exchange balance steadily decreasing, or they confirm one another essentially. And when you're talking about Bitcoin fundamentals, you can't ignore the hash rate. Now, I know a lot of people probably aren't familiar with the hash rate, or at least its relationship to price. But if I've back tested the hash rate, and I couldn't find a scenario where hash rate hit all-time high and price didn't also hit all-time high within a reasonable period of time. And that's interesting, because indicators tend to be lagging in nature. So if you find one that is what appears to be a leading indicator, that sets itself apart from the other thousands of indicators that you could, focus on. And essentially, this is part of what was contributing, or what is theoretically contributing to a bullish bias on my part. Now, what you see in the relationship between hash rate and the Bitcoin price is you see a synergistic relationship, right? Because as price hits higher levels, then it incentivizes more miners to put more mining equipment on the network and contribute more hash power, which then pushes up prices, and it has a synergistic effect. And you can get into a scenario where you really get that effect starts to run away and leads to a parabolic rise. Again, I'm not saying that that's about to happen soon, but the underlying fundamental dynamics of the market are such that it could happen. And that these are some of the things I've been paying attention to that lend themselves towards a bullish bias. Now, I can't trade fundamentals alone. I don't do that. I need to see a price setup in the chart. And right now, I don't see that, right? Right now, price is doing the opposite of that. It's hitting my invalidation level. So, I can't blindly trade fundamentals, but necessarily now that my invalidation's been hit, I'm not necessarily going to open a major short position. It's more of a time to kind of sit back and, watch the market unfold, give it a little time to play out. And, then, whatever I'm seeing in the chart afterwards, then I'll fall in line with that and open a new position and get on board with that. But yeah, I think now is a good time to be managing risk. Maybe you do have a long position open. Maybe you have an edge or some type of rationale to get to be entering a long position in this area. I don't know. There's a lot of different edges, but volatility is expanding. So if you are in a position, maybe it's a good idea to lower that position size to manage risk on that. Start managing equity if the market gives you an opportunity to do that. Those are all definitely good ideas to implement, especially just in the current market conditions. Anyway, I hope you guys like this video. Please make sure to subscribe to the channel, like the video, and leave a comment below. And I'll catch you guys in the next one.